All right, mic check. You good?
Mic check, mic check.
All right, we're good to go. Let's do it. Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
Hey everyone, welcome back to the show. Today, Chris and I are going to be walking through a really detailed assessment of a pretty hot stock on the market. Don't hurt your brain too hard thinking about it. It's Tesla. So if you've seen our Ulta Beauty episode, then you'll probably see some things that look pretty familiar. We're going to look through some financial history, pick apart a few things that jump out on the page for us. But in this episode, we're actually going to be breaking this into a two-part series. And what we're doing is something that we've actually talked about quite a bit is we want to do like sort of a bull versus bear case. You know, Chris and I, we tend to come up with, a valuation, we discount the cash flows and just put a number on there for the intrinsic value per share. But for this, we really want to focus on, not only the growth drivers, but also the really inherent risks facing a business. And I think Tesla, being such a speculative and really just hot growth stock, I feel like this is a perfect case study for us to do that. So, why don't we just jump right into it? And I think the first thing that I want to do is I'm going to share my screen, and I want to talk through some information that we were kind of peeling apart from the 10K on Tesla's most recent earnings report, which is for fiscal year 2020. And here you have a revenue breakdown. This is in Chris and I are the amateur investors sort of, premium, I guess, spreadsheet model for our stocks. If anyone's interested in using something like this, just reach out. We'd be happy to share it. So the way that, if you look at this, it's very clear looking at the blue chunk of this pie chart that Tesla sells cars. Okay, so they have $26 billion that comprises 83% of the portfolio. And then you go through automotive leasing, services, which I guess that could be, auto repairs and things of that nature. I didn't dive in too deeply into what the services parts were. I wanted to get a more holistic financial overview. And then you have the energy generation, which is the Tesla solar, and also the Tesla battery storage solutions for residences and also for industrial customers. Walking through the 10K, the way that Tesla walks through their business and how they publicly represent their revenue profile, they have two reportable segments. One is obviously automotive. I think that makes sense. And two is the energy generation and storage. In the automotive section, you have the Model 3, the Model Y, the Model S, and the Model X. Those are obviously the cars that are out right now and are the main drivers for revenue in Tesla. For their consumer and commercial components of the automotive segment, Tesla, even in their 10K, talks about specifically the Cybertruck, which is to hit stores, I guess, in the next few years. I don't remember the date. Chris, do you know the date offhand? If not, it's not a big deal.
No, not offhand.
No worries. And then also the Tesla Roadster, which is really a sports car in the EV space. And then you have in the commercial segment, the Tesla Semi. And I think that's going to be a fascinating take, because I think what is the company that's trying to look at semis? It's not NIO. It's
Lucid.
Well, Lucid is one of them. There's another one in the EV space that's looking at specifically 18-wheeler. It might be. Is it Lucid or is it something else?
It might be called something. It's Churchill Capital, but I think Lucid's the name of the
Lucid's one of them. I'll have to look. It'll come to me as we're talking through it, and I'll probably just randomly spurt it out. But the 18-wheeler and just like EV trucking, I feel like that's tremendously disruptive. There is just really not a way around trucking when you talk about the United States, just because the land is so expansive and the rail infrastructure is not always set up where it makes sense to just have a rail spur that goes directly to a manufacturing plant, or otherwise. So the truck is just the best solution. That's why you see them loading up the road. So to get diesel emissions and the particulates out of the air, I think Tesla has a really great opportunity there to get all of those trucks. You see Amazon trucks, it's sort of agnostic of the company. The Tesla would replace the Volvo diesels, the Mack trucks, what have you. I'm really excited about that space to see what happens there. But sort of wrapping up the automotive division, the FSD is just littered throughout the 10K. And that is the fully self-driving component. And, Chris and I, as we talk through the bull versus bear case, the FSD is a major assumption that's either going to really help or just like totally dismantle the Tesla valuation thesis. That's my opinion. And then let's jump into the energy and generation. You've got the energy storage products and then the solar energy offerings. So that in a nutshell is Tesla's revenue mix. Chris, anything to highlight on that? I think the next thing that I would want to do is go into really quickly sort of like the financial performance of the company. But any thoughts on the revenue mix?
No, I think that's good. I mean, I guess there's one other piece that I know that Kathy Wood's assumption brought up is that she factors in insurance. So Tesla offering insurance for their products and their cars. And I know for her models, they see it as a big piece of revenue for their 2025 projections. But I know we didn't factor it in. I think they are overstating it. I think it will be a piece, but much smaller than what they're saying in their case.
What is their case, Chris, in terms of just like their 2025 number for insurance revenue?
It's pretty crazy, to be honest. I think it was like, it's either 2.2 or 2.9 billion. I know I'm mixing up the numbers. It was more than 2 billion that they would be receiving in insurance by 2025, which is
really
pretty astronomical for a car manufacturer for offering insurance like that.
Okay. I know you shared the link, so I'll look at it. Let me just see if I have it here. Insurance revenue?
Yes.
Bull case, they're saying 6 billion in 2025 and 23 in the bear, which doesn't really make sense to me. That's exorbitant, right? Because right now in 2021, we're recording this, but this is the reporting period. That's 26 billion is their automotive sales. I just don't see how you grow in the next 5 years from this reporting.
And even if it's by 2025, we're halfway through 2021 in theory. So it's like 3.5 years. Yeah,
I don't buy that.
4.5 years is still.
I don't see that spot. Also, and isn't there a chance that they have to pay out claims?
They weren't factoring in that many claims, so it's 100% revenue keeping without paying out any claims. Which in the insurance industry, that's not going to happen.
I'm gonna ignore it because I don't get insurance, and I think it's just better not to make broad assumptions about something I don't understand. Okay, so let's jump into this, I guess, as brief as it kind of naturally progresses. Let me jump out a little bit. Chris, how's this showing up on your screen?
It looks pretty good on mine, so.
Okay, is this okay?
That's better, yeah.
Okay, let's do that. I'm gonna move over one notch. For our Spotify listeners, this is probably not fun to listen to, but we're going to talk through some fun numbers. So we like numbers. Looking at Tesla's daily price chart, and I never really care so much about the price chart, but oh man, that is a spicy parabola up. I mean, we saw some break here in the trend, but geez, I mean, this is crazy. A disclaimer as I walk through this, I have two models. If you're looking at this on YouTube, I have two tabs. One is the Tesla, if you see that in the bottom left-hand corner. The other is copy of Tesla. In order to come up with a relatively reasonable valuation that doesn't get messed up mathematically, because they have such a long history of negative free cash flow, I actually sort of extrapolated a sort of moderate growth based on the 2020 free cash flow number. I grew it at, I think, 15%, which I'll show in a moment. But looking at this, the revenue is growing. I might have to zoom out just a smidge again. Sorry, Chris.
No problem.
The revenue is growing annualized 75%. There's no surprise that Tesla's stock is jumping up. I mean, I don't know many businesses that are touting 10 years of 7,500 or 75% growth rate on the top line. I think that's incredible. They clearly have a product that people want, and you can even see it. The trend line is pretty tight, just from an R squared. I mean, it's pretty tight, but it is up. I mean, it is up. How long that lasts, I don't know. looking at this, the capital spending is trending up. It's down on, if you're looking at this on YouTube, it's trending down just because capital spending, I have negative as an expenditure. But that makes sense. I mean, if you're growing the revenue at 75%, let's just,
they're reinvesting a lot of the money that they're getting back into the business. With, I know they're coming up with a bunch of the gigafactories right now. They have 3 running. I think it's New York, Shanghai, and Nevada. I know they're building one in Texas, they're building one in Asia, and they're building also Berlin. So they should have 6. I know when I was looking, it was modeling about 500,000 cars per year from each of those factories when they're fully up and running. So yep. I know that's a decent amount. And I know even our ARC, we're going to keep relating to ARC because that's just the most recent model that they were comparing to, but they're expecting their bullish case was 12 million cars, which is pretty astronomical in the amount of time by 2025.
That's ridiculous. I will show, I feel like, let's go through our bull case after we look through some of the financials here. I'll show kind of like, my model is obviously not going to be as extensive as whatever Kathy Woods paid.
Yeah, she's got a bunch of analysts there to help her do it, and that's their day job.
It's me and Chris. Plus, we are other miscellaneous jobs and tasks. So I think we did a pretty good job, to be quite honest. Like Chris just sent me the link, and before this episode, I looked at it for like 12 seconds. I'm not that far off. I just think that she's like, these assumptions are crazy. And we'll show kind of why there's a lot of assumptions built into this. So capital spending annualized is growing at 36%, and they're growing it on a double basis percentage-wise. That's impressive. Mm-hmm. That they're able to get that kind of return on a growth of, so it's reasonable. I mean, they're reasonable spend for the top line impact. That's, I'm gonna not use profanities. It's sweet. They're doing really well. Okay, that's all I really want to talk about is just like the insane revenue growth. Looking down in sort of like the financial metrics, it's a mess, honestly, Chris. Like this is one of the hardest businesses to model, even just from like an absolute zero brain cell kind of like model where it's like you plug in the numbers, you look for averages. This thing is brutal to model. And this is red just because I didn't go into the balance sheet too deeply.
It probably doesn't help that Elon doesn't believe in the financialization of America. So just everything's wonky by comparison.
He doesn't care. So the current ratio, they're making a lot of money. So obviously that's going to be pretty good. But the debt to equity is high. It's certainly very high. But it's not the worst I've seen in we'll call it the tech sector, because I think of them more as a tech stock than a car company personally. All right, this is not that bad, but looking at sort of like the return on equity and their return on invested capital, just because they've so rarely turned a profit in recent years, very tough to look at. But looking at sort of the revenue growth year over year, which is, they're calculating it differently. This is pulled from Morningstar, and I did a direct calculation. It's high. They're growing the revenue very, very high. So I think like thinking from a, I guess, valuation perspective, hopefully they can grow into that if they can maintain profitability and reduce costs. I'm going to pause on this model and we'll come back to it because I do want to talk about some valuation stuff after our bull case. So Chris, do you want to kick us off with some of the items that really pop for you for why you should buy Tesla?
Yeah, so I mean, mine, I don't have as many of the numbers in my bullish case because I know we're going through it on your end, but I know just like it's really bad to bet against Elon Musk. I mean, I think him as a brilliant engineer, a brilliant entrepreneur, people that bet against him usually lose, and he has a history of doing that with PayPal, with SpaceX, with Boring Company, with Tesla. So I think, I mean, he's a brilliant for that reason, and he is almost this weird thing for the first time in life. And I'm more on the social media aspect. He's kind of like this Twitter personality, which is beloved, but then also founder and CEO. Like I can't say, aside from maybe Warren Buffett's probably the next closest person, but it's more of like people take his quotes out of context and like repost them for him. If you were to go on Twitter,
he's like a celebrity CEO, honestly.
Exactly. Like I don't think Jeff Bezos, I know, especially with a lot of going on with the unionization of the Alabama plant or the Amazon Alabama factory or whatever, or warehouse.
Yeah, just
I know,
main conditions.
and I know Elon's had his bouts with unions as well, but
Yep.
he's kind of in this weird shape that like his personal brand is much better than Jeff Bezos's. It's much better than Bill Gates, in my opinion. It's much better than a lot of CEOs in the Fortune 500 companies, or just any founders in general. Like I said, the only one that's almost as beloved or maybe more is probably Warren Buffett, and Warren Buffett's not even on social media. So it's more people doing the work for Warren, taking clips out of context. So I think he's brilliant. I mean, his mission to try and go and colonize Mars, Tesla, just everything he's done, I don't want to bet against him. I was right when I bought it back in 2018, but I just got scared out of the evaluations of the company. The gigafactories, I think that's another bullish case. And Ben, feel free to interrupt or add anything for your bullish cases as well. But I think with the gigafactories, with him going to Texas, with him going to Berlin, and I know he's trying to expand into Asia outside of the Shanghai facility. Ben, do you know where the other Asia facility he wanted to be in
No.
was?
So from what I remember, they're like opining on where they place what is it going to be? It's going to be like they're calling it Gigafactory Asia, and they're looking at Japan or South Korea, from what I remember. So I don't think they've made a decision on where it's going to be placed. From my perspective, I feel like it makes sense to sort of be, I mean, South Korea is very competitive in the car space, but historically speaking, just thinking about just like, Kaizen and Lean Six Sigma and Toyota, it makes sense to be in Japan, I think. I feel like
Yeah, I guess the one caveat to Japan is they do have great ports. I mean, they are like an ocean island like country, but I even think maybe South Korea would be more advantageous for the fact that they're on land. They have a little bit more space, maybe not that much, but yeah, I mean Japan and South Korea are best in class for what they deal with automotive industry.
Yeah, and I just think like relations wise, I feel like just being positioned with the tensions between South Korea and North Korea, it honestly might make more sense to be in Japan, just because like I feel like we have favorable trade relationships with them. And I don't know. I don't want to speculate on that, but yeah, you might be right, Chris. Honestly, the distribution routes might be a little bit better, but
yeah, because they can get products more easily from China, but then they also do have ports to bring in stuff from California and such from their end. But yeah, I mean that makes sense. I think one thing, just an excellent product. I mean, I can't name anyone that's gotten a Tesla and that's hated it. I know they've had gripes in the past. I was even actually, while doing research, I love oh man, I'm drawing a blank on the show. Jeremy Clarkson, James May, and James Hammond. They are from Top Gear. So they're the British version of Top Gear. And this is kind of messed up. I know in 2013 or 2014, around that time frame, they had an episode, and it was very scripted, that the Tesla died. And in the episode, literally, they're like, this car's busted, it won't go. But they lied about it. And they actually came out years later and said, because Tesla actually tried to lure up and sue them, when they were dropping off the car for actually doing the performance, one of the engineers that was dropping off the car oversaw the script, and the script said the Tesla dies. And he's like, wait, that's weird. Like, it's a brand new car. Why would the Tesla die? So I know Elon has had a lot going against him. And like I said, he's always coming on top, whether it's Top Gear, and the stock fell. And then I was kind of looking through the lawyer case, and they ended up winning, not for defamation, but they did win a lawsuit against Top Gear in regards. But like they were said, it's not meant as financial advice. It's not meant to be taken if people buy the car. But when millions of people watch the show and then they say the car died randomly, it looks really badly on Tesla, because the car didn't fail. They just, directed this in or acted in that this car died. So I think that's unfair for what they did to him. And then even when you look at hedge funds or you look at companies like that, I mean, they've been trying to short the stock for years and almost killed Tesla. I mean, I think it was in 2011 or 2012, they were like 10 days away from bankruptcy, and he was trying to sell to Apple for like $10 billion evaluation or whatever it was, and they didn't take the deal. And then now Tesla's grown to what it's become.
Yeah, thank God.
And now Apple's trying to get into the car space. There's rumors they're trying to partner with someone, not partner with someone. So it's just very interesting. I just think the product's excellent, though. I know my former boss from Covanta, he actually has one, and he loves it. He says it's one of the greatest things ever. So obviously Elon Musk is always about innovation and improving products. Anything to add there, Ben?
Yeah, one thing I have really noticed, Nikola is the trucking company.
Okay.
Sorry, I had to do this. I even warned I was going to do a stream of consciousness blurred, but people have always bet against Elon Musk. And it's really weird. I mean, I even see this sort of in just like any sort of like progressive company that's sort of a disruptive space. I mean, we even see it with Bitcoin, especially. They're like, oh, this is the worst thing on earth. And people find every reason just to be like, you're boiling oceans. Elon Musk, you're going to fail. I mean, the company's been around for over a decade. Elon Musk has delivered on targets, maybe a little bit off, but people are just constantly shorting the stock. He's even been on Kramer on Mad Money, and like he was crapping on Kramer. He was like, oh, weren't you the guy who recommended Lehman Brothers as a pick? And then he walked away from Kramer live on TV after Kramer's like, he's like, I don't think anyone will buy this stock at this valuation. And he was like, oh, weren't you the one who recommended Lehman Brothers? The one that went bankrupt, SEC fraud, classic. So Elon Musk is well aware of, the valuation and things, but yeah, I still believe in this company, and we'll see if I believe in it after our bull versus bear case. But do you mind if I jump into some point? Did you have another point?
Yeah, I was going to go right off your Bitcoin investment.
Please.
I mean, when he's such an innovative mind and always trying to change the status quo, I know he's kind of had his qualms with Bitcoin, especially on Twitter and stuff. He's like, he said early on, or at least in 2020, he was saying Bitcoin's almost as bad as fiat. But then, he really put his money where his mouth is and buys $1.5 billion worth of it. So you could call it crap, but I mean, if it works, it works. And I think in the beginning, it's kind of like there's a rule of three in Bitcoin. And a lot of Bitcoiners say this, that, you need to touch it 3 times. Myself, I'm not excluded from this. When I first heard about it in 2017, or I heard about it when what's his name bought all the pizzas for 10,000 Bitcoins. I'm like, oh, this is weird, whatever. Then 2017, someone's like, oh, you should buy Bitcoin. I'm like, no, that's tulip mania. And then finally by 2020, I've come around to it and done a lot of research and learning about it. So I think he finally learned about it. He's an engineer. He looks at it through an engineering mindset. And he's like, wow, this is actually, an electronic payment system. And I know he jokes about Dogecoin and all that, but not only did he buy 1.5 billion worth of it, but he's now accepting it as payment. And they plan, I mean, this is what they said. They're planning to keep it on their treasury long-term and not sell it. He could change that tomorrow, but for the time being, it looks like he's a long-term holder of Bitcoin.
Yeah. I think the language they used on that, which I think to your point is right, that they plan to hold it, is that we may or may not liquidate our Bitcoin positions after receiving it in transaction, which is it. I don't know what to make of that. I don't know if it's necessarily that they will hold it for a really long time, or I think they're just going to hold it, because why would you put $1.5 billion on the balance sheet? That's like almost the entire net revenue. That's almost the entire revenue of their whole energy generation and storage portfolio. That's a ton of money.
Yeah. And they're serious about it too, because they use BTC Pay Server, I think is the name of the company. It's run by, I just saw him on a podcast. It's Nicholas Dorier. And basically in 2017, there was a company called BTC Pay. And they were kind of hiding the code of what they did. They had really bad customer service. And you could even see the tweet from either 2017 or 2016. He said, I'm gonna put you guys out of business. And then come 2020, he, worked by himself. He came up with BTC Pay Server, to try to spite this other company that was kind of, treating the customers poorly, not sharing the open source code, kind of hiding things, kind of doing things really sketchy. And now Tesla uses them, and they actually found a line of his code that was off. And since it's open source, they're like, hey, we just want to let you know we found a bug in your code, fix this. And, we love the product that you have, and thanks for helping us out. So, it shows such a stark contrast from 2016 to 2021. Now Tesla's using it, and they're, the engineers in them are trying to help improve product and trying to prevent any bugs or glitches from taken away from them, basically. So I think they're serious about Bitcoin, and they're here to help and innovate the space as well.
That's cool.
You want me to say my last point, or you want to start going to yours?
No, say your last point for sure. I want to know like all your thoughts, and like maybe after you say maybe your last like point or argument, I do want to know kind of like where you stand. Maybe let's save that at the end. But if you have like any key takeaways, like how bullish you feel based on those factors, like
yeah.
Okay.
So I guess my last thing is I kind of see the EV space, and I know other people have said this before. It's not like winner take all, but you kind of look at the Ford, the GM, the Buick, Cadillac, those type of brands. they haven't touched EV at all. And then not only if they were to come out with an EV car, like imagine they just come out with this random EV car and slap a Ford logo on it, it's going to be so far inferior to Tesla. Not only it's like, why would I buy this crappy EV car from Ford when I can get an awesome car from Tesla? So I just think Tesla has the leaps and bounds of the electrical engineering, the battery, that's more of a software issue. Like also, and this is one of my last favorite bear cases. So when you think of gigantic data conglomerates, you think of Amazon, Facebook,
Bull or
Google.
bear?
Bull. This is a
Okay.
bull case.
I was like, oh man.
When you think of data conglomerates, you think of, Amazon, Facebook, Google, those are the ones that just come to mind that have all this massive amounts of data. Google in terms of self-driving has only I think it was like 10 million hours of self-driving practice with just like trying to use a Google car or hooking up sensors on
the
cars.
Waymo, right?
Yes. Yeah. To do it on that. So 10 million hours, a lot of freaking hours. Tesla has over 15 billion hours of testing on this. Yes, and Google's the next closest competitor. And if you think of anyone else, like if you think Google's
I got goosebumps from that. That's awesome. That's
if you
really
think about
cool.
Google, I mean, I take Google over Ford, GM, and all those companies any day.
Oh,
that Ford's like, it's like, here's, Tesla and self-driving, here's Google, and then Ford and GM are just way below. And like, if they can't even keep up with Google's not even a car company. Like, I just think it gives me goosebumps thinking about. So Tesla's obviously done their fair share of research when it comes to self-driving. Not saying that Google can't come in and come up with a great self-driving product, but I just think, that's a really bullish case on Tesla, walks the walk and talks the talk, and they put their money where their mouth is.
Dude, yeah. I mean, 15 billion hours. That's like my Skyrim playtime, honestly. That's brutal. That's crazy. A lot of people talk about, the first mover doesn't always have the advantage. But I think when you're talking in terms of data exponentiation and just sort of like talking about Moore's law, if you start exponentiating, even a year ahead, 15 billion hours, how are you going to catch up that from 10 million? You know what I mean? And like you said, I didn't even think about that. Like Google, I was like, oh, maybe they'll come into the space for the fully self-driving vehicles, but it's like, okay, well now they have to go make cars. And think about how long it's taken Tesla to ramp up its production. How is Google going to do that?
Yeah, so Tesla is kind of like the taking all the knowledge of Google. Obviously, they don't have as much data as Google, but when it comes to self-driving, kind of that niche, as well as the car manufacturing side, they're taking out two giants at once. They're taking out the Fords, the GMs, but then they also have all the data and knowledge that Google would love to have. So it's kind of like they've got, both ends. They've got the car and they've got the data, and they're really going to combine that into something very powerful. And it's seen in their products. People love their products, and that's another thing. Like, not to say they're a cult following and a cult brand, but they are in a way. They're not making the money that they should make relative, the price to earnings ratio. But with that being said, people love the product. They're always making it better, and they just have a brilliant minds. Not only just Elon, but many people in the company.
That's 100% true. Seriously. Okay. I'm going to jump into, I guess, my bull case. Those points are really very true, Chris. Like everything you said is like the 15 billion hours that's building an assumption towards, future revenues, but talking about just like, why would I switch from a Tesla to a Ford? That's brand stickiness. That's hard to just like totally deface. And like after all of the stuff that Elon's been through, whether it's the backlash from the Joe Rogan podcast or the Cybertruck shattering on live TV, they've retained brand image. And I want to buy a Tesla. I want to buy a Tesla, and I'm probably going to live in Brooklyn or like North Jersey in the near future. So it's like, even with those difficulties of parking and finding a charging station in New York, I'm like, I'll figure out a way because I want a Tesla. Let's talk about my bull case. So Chris, really great points. I kind of synthesize into three main things, but I also have sort of like a financial model that I'm going to share after I kind of talk through some of the qualitative points. So one, I think that because Tesla has struggled so long with profitability, I think that's really kind of impacted the image financially of the stock. And I think that with the ramp up and the increased, development of gigafactories and more factories than I think are even like verbally spoken for. I think I could see them coming into play because Elon always has a trick up his sleeve. You never really know what Tesla's going to do, to be quite honest. So one, I think cost of production is going to go down quite a bit. And I'm starting to see that in just like the trends of the prices of the cars. They are constantly looking for a more affordable option. And especially as you're talking about sort of like the Asian markets, talking about, a 30K, 35K car, that really becomes really competitive with some of the more, I guess, retail cars, because I feel like Tesla has always been kind of like viewed as a luxury automotive automaker, but I think that brand image is changing. It's still luxury, but I think it's becoming an accessible luxury, especially as charging stations come available. Number two is the fully self-driving cars. And when you think about just like fully self-driving, you think like drinking a glass of whiskey in your car and you take a nap. But I think the revenue opportunity is on the ride hailing, the basically robo taxis, which is Elon Musk has been sort of touting that for a while. And you actually have the option now to buy into a fully self-driving package, the FSD package, for $10,000. So that could really, really be a tremendous revenue growth driver for Tesla. But that is a pretty intense assumption. I'm gonna show you why it's a pretty bold assumption, just looking at some of the numbers. And then third, sort of with the first point, is the increased ramp with more gigafactories globally. I think as production scales up, I think that's going to expand markets quite a bit, because there won't be an opportunity for saturation in a specific, marketplace. I think as Elon Musk expands and maybe gets more incentives in Asian marketplaces or otherwise, I think Tesla just has so much room to grow. There are so many people on this earth. And in 2020, their total deliveries were 499,550 cars. I think that's the number.
That's about right.
I mean, that doesn't even scratch the surface of how many people exist. And like, assuming, maybe 4 people to a car, there's still opportunity for growth there if Tesla wants to be the dominant player. So let me share my screen here. I have some columns hidden just for like viewership, but I can kind of explain some of my assumptions here. So looking at a few components. So obviously you're looking at 2020, and then it skips to 2024, and then it skips to 2029, 2030. I just have that so it fits in the screen. I can expand it, but it's not worth it. Basically what I'm doing is we can expand this for a little bit and I'm going to undo it. But I'm taking Elon Musk's Q4 2020 guidance on that they will be growing deliveries by 50% going forward on average. I think that's a little preposterous. So I took the number out to 2025, which is about 4 million. That's 4 million deliveries with a 50% growth rate year over year. And the reason why I did that was because I made some pretty broad assumptions on the future gigafactories that have been kind of discussed verbally and in the 10K. And I made some assumptions that, I mean, this is even bold here, that the Giga Asia is going to be 1 million, because I think they've been saying it's 500,000. I think that's really what most of the gigafactories are a $500,000 full ramp capacity. So
500,000 cars, not $500,000.
Cars.
No problem.
Correct. Sorry, I'm rattling my mouth. So if I stumble, just yell at me. Okay. So we're looking at this. I have it ramping to the 4 million deliveries. These are cars. No dollar sign. These are cars. So 3.7 million cars, or sales, deliveries, whatever, based on a pretty broad assumption that they are going to have all these gigafactories ready to go here. And then what I did from 2026 to 2029, I grew it by 20%. Arbitrary. This is an arbitrary thing, assuming that maybe they have 1 more gigafactory, maybe 2 more gigafactories. And then I have it it goes to, in 2030, I have 10 million cars. And the reason why I wanted to grow into this sort of like 9.5 million deliveries was I just looked at the car company with the most sales, and that's the Volkswagen Group. And they're about 9.5 million cars in 2020. So thinking about that, them being the biggest automotive group in terms of like units of sales, I think that they could in 2030 get to that number of Volkswagen's 2020 number. Again, from the hip, feeling it out, just trying to make sense of known assumptions. So the average car price, I just Googled Tesla's weighted average car price, and it came to about 52,000 per car. Actually, this is what I did. I Googled it and verified it. I pulled the 10K car revenue, the automotive sales, just divided it by their 2020 deliveries, and the numbers matched. So I just made it 50K just to be reasonable. The prices are going to fluctuate, whatever. That's how I'm driving some of these numbers. So car sale revenue, this is, what actually was reported about 25 billion. Going out to 2030, $472 billion, which feels absurd. But honestly, I want to focus on, I think, the 2025 numbers because they're, to me, more feasible. And now, looking at the self-driving revenues, so the car lease revenue, I think, is the easiest one to explain. I basically just took again, very similar to what I did for the car sales. I took the automotive leasing revenue divided by the number of cars to get an incremental revenue per car, and that's $2,100. So I basically just multiplied it by the number of deliveries. Very simple arithmetic. This self-driving component, I had $10,000 for the first 5 years, $15,000 for the latter 5, because if you see a car driving around, you can probably smack a 50% premium on people to be able to drive asleep. I think that's a beautiful thing, and I'd spend $15K for that. So let's jump into very quickly the valuation with some of these assumptions. So talking about the deliveries number is bold, but I think feasible. I think Elon will get there because he really claimed 50% growth year over year going forward. And I think going forward 5 years that's probably what he meant. I don't think he's thinking, out to 2030. He might be. I don't know if he included that. He didn't say it. Looking at a price to sales figure, which I'm just trying to look at, reasonable things that are, currently trading for these ratios, which are really high, honestly. Like a price to sales ratio, a price to revenue ratio of 10 is pretty high. I get a share price of 2,400, 3,600, and almost 5K if we're talking about a price to sales. So 10, 15, 20 respectively. And then out to 2030, I made it a little bit more conservative that they'd be reverting to the mean because I feel like the valuation thesis probably is coming either into fruition or collapsing. So I made it a little bit more conservative, 5, 10, 15, which I think still sort of aligns with tech. Tech being around 10, I would say right now. So a 3,000, 6,000, and 9,000 price per share. Not adjusted for splits or anything. That's just like what it would be with the current share number. Those are crazy numbers, honestly. And I know, Chris, we were talking about the ARK Invest, Cathie Wood's valuation. She's even saying that their bull case is 3,000 for 2025.
That's their bull case is 4,000.
Oh, really?
Yeah. It's 1,500.
That's their base?
Yeah. Their base is 3K.
That's spicy. Okay. So okay. So I'm more conservative than Cathie, I guess, on this, which is, I'm not going to say I'm smarter because I'm not. I'm going to just say that live. I'm not smarter than Cathie Wood. But I
am also not smarter than Cathie Wood, but I don't have as much optimism as her.
Combined, maybe we would have fun at dinner, but again, still combined, maybe not smarter than Cathie Wood.
I love Cathie Wood, so I can't speak ill about her. She's very optimistic in her evaluations.
Yes. And honestly, maybe she understands something more than I do. But I'm just looking at I'm looking at this strictly from just like a broad assumption. So there's not that many variables built into that. I know looking at her model, they said they did 40,000 simulations of a Monte Carlo model. I'm not doing that. I'm using Google Sheets. So take this with a grain of salt, but the number is conservative. So if you can feel comfortable with the 2,400 to 4,000, I mean, that's still awesome growth. So again, driving the delivery assumptions was just sort of the gigafactory production. So this is my price to sales valuation. really quickly, and then I'll move on. We'll take a break after this to talk about the bear case. So this is going to pretty much conclude the bull case. Chris, I'm going to give you an opportunity definitely for some closing comments on the bull. But what I did here for this one was these were the 2019 and 2020 numbers. So what you see if you're watching on YouTube, the 2011 and 2012 free cash flow, these are actuals. But what I did was I extrapolated and projected out 15% growth off of the 2020 number for free cash flow, just to get an average basis of 26%, 27% free cash flow growth, which again is really ridiculous. At the end of the day, I think it's ridiculously high. I wanted to do a discount cash flow model with some fudged sort of like free cash flow growth rates and sort of assumptions here. I get about an $800 intrinsic value per share at a discount rate of 8.8. And I really just use the weighted average cost of capital to drive that. And their cost of capital is going down because they've been profitable. So you're getting about a 9% return at the current market price. So this is my discount cash flow model based on just like absolutely ridiculous assumptions. So I would much rather, honestly, for our viewers and listeners here, I would think about it more in the price of sales, get comfortable for sort of like what sector and industry averages are, and then you can kind of extrapolate off of that. So that is my, from the trenches valuation thesis on Tesla. And I think there's a lot of opportunity for growth. The caveat is there's a lot of assumptions built into that. So do your research. So Chris, what are your thoughts on that?
No, I think we hit on all the good points. My thing is you never bet against Elon Musk. So I will not be shorting the stock anytime soon, if that's what people are wondering. We'll talk more about the bearish case, and I guess we'll give our final wrap up in the other episode, whether we're buying or selling, or if we're just holding off and waiting. So that's all on my end. Ben, you got anything else for this wrap up of this episode?
No, I think I'm good. I mean, looking at the bull case, I'm excited to see what Tesla does, but let's find out more in the bear case. More to come.
All right, sounds good. Thanks, everyone. Remember to smash the like button on YouTube. Give us a rating or review on any of our podcast platforms, LinkedIn, TikTok, our website, Twitter, Instagram. You know where to find us. Have a good one, everyone.
See you next week.
See ya. Bye.